All right. Last day of the month on a Wednesday, July 31st, 2024, on a Fed day and on a Bank of Japan day. And I think Daddy promised earlier in the week we'd get some volatility once this stuff happened, and I think we had it. We have numerous assets that moved 2-3%. You're talking about energies. Crude oil was up 5%. Energy's up over 4%. NASDAQ up 3.5%. Copper up 2.5%. The yen up over 2%. Don't see that every day. Silver, gold. Lots of big movements today. Why? Ironically, there was a huge amount of movement that happened even before the market, before the Fed, right? Market was up. NASDAQ held it. Interestingly enough, I think the conclusion is that the Fed, I would argue, was somewhat dovish. I wouldn't call them super dovish. I wouldn't call them hawkish. Somewhat dovish. And ironically, the things that are supposed to be the most bullish in that scenario went up the least. The Russell tried, right? This was post-Fed right here. And then erased that whole thing and ended up right where we were. And the Dow did the same thing, even ended up a little lower than where we were. But the S&P held most of its gain. The NASDAQ basically closed on high. Now, granted, post-market, we had some good earnings out of some of these companies. But, you can argue, was it hawkish, was it dovish? I will tell you the market said that it was dovish. Because look at gold. Look at silver, right? The dollar, right, went down, right? The Aussie, which had a real bearish thing last night, came all the way back, right? British even rallied post-Fed. This is all post-Fed right here, right? Canada didn't do much. The yen, which was Bank of Japan last night, rallied and held. Tried to sell off, and then post-Fed rallied back again. Euro rallied post-Fed. So you get the idea, right? Swiss was up basically the whole day, and then, well, again, post-Fed. So what can we say? Even bonds were up a lot, right? So post-Fed right here on bonds, right? So what can we say? There still seems to be no liquidity thing. My thesis continues to be, in the stock market, we are in a bull market. Bull markets don't go up every day, every week, every month, or for that matter, every quarter. But I think that we are still in a bull market. And when in a bull market, you want to be doing more buying, certainly, than selling. Right? More longing than shorting if we are in a bull market. That's where I think we were in. I could be right or wrong, obviously. But with the Russell essentially just off all-time highs. The S&P, the S&P is like 2.5% or something from all-time highs. 2.5%. It feels like we just went through this brutal bear market because NVIDIA and blah, blah, blah. All these stocks, got hit 20% or something like that. But NVIDIA's right back to 117. When it split, it was 120. It's right back to where it was, 5-6 weeks ago. So that's all I really think. Bull market, trade from the long side. I don't know that it's going straight back to highs on the S&P and all this stuff, but it's pretty damn close. It's 2.5% away. The thing was up almost 2% today. So this stuff can happen in bull markets very quickly. It's not what I personally think is going to happen, but I have personally been wrong many, many times. But what I think is a bull market. So the slippage on a bull market is going to be to the upside, is what I think. All right, so that's the idea for today. Hope everyone had a good one.